Welcome to Dollars and Cents with Kevin Methvin. Today we have the fantastic, the icon, a gentleman I've known for well over a decade, Mr. Rob O'Malley.
Well, thank you, Kevin, for the warm introduction.
Yeah.
And right back at you, brother.
Rob is quite the loan officer. He's probably helped thousands of families with financing. We've been working together. In fact, I used to work with him. Now we work together in a different facet, and it's been great. In fact, we got one more closing maybe this week or next, right?
Yep. It'll be probably mid next week.
Yeah, and we're getting to the end of the year here, so I heard you told me about the changes in the loan limits going?
Yes, sir. Every year, FHFA comes out with the new conforming loan limits by county for the United States. And just late last week, they released 2026 numbers. And it's going to help a lot of people. Why? Well, the conforming loan limit nationwide has now gone up to $832,750.
Wow, okay.
So what does that mean? That means somebody can buy with conventional financing with as little as 3%. Let's use 5% down. More people qualify for that. That means they could purchase at $876,500 with just 5% down.
Okay, great. And why is it 5% down typically works better for most people?
The 3% down requires certain criteria, like first-time home buyer. They have to take a course, a little stricter criteria to get 3% down with conventional.
Okay, and that's with conventional. So FHA is a whole different animal, right?
Yes, FHA loan limits are yet to come out. We always get conventional first.
Mm-hmm.
But something else to mention is we also have the conforming high balance loan amounts that just came out. And conforming high balance are for high cost counties like Contra Costa County, Alameda County, Santa Clara, San Francisco, Marin, those types of high cost counties. That new conforming high balance loan amount came out and it's $1,249,125.
Wow. So I guess what we're getting at here is that, yes, you can buy homes in the Bay Area and get conventional type financing with sometimes as little as 3%, but typically about 5% down. And what does it look like as far as credits from sellers? What are the limitations on that in case they need help with closing costs?
Well, it's actually great. If they're putting less than 10% down, it's a 3% purchase price seller credit allowed towards closing costs.
Okay.
If they're putting anywhere from 10 to 20% down, it's a 6% seller credit. And if they put greater than 20% down, they can have a 9% seller
9%.
credit towards closing costs.
You ever get 9%? Can you even use all that?
Yeah, we wouldn't even be able to use it, right?
Right. And what does that allow us to do as far as interest rates and programs for the client?
Glad you asked. I'd say 95% of my buyers right now are negotiating seller credits for closing costs. Let's just say it's an even $10,000. If you get a $10,000 seller credit, I tell buyers that you have leverage. Right now, homes are sitting longer, right? The buyer is needed.
Right.
So you could go in and lowball the seller, right? Let's just say you go to the seller and say, I'll pay you $10,000 less. The seller would probably agree to it. What if you paid full list and asked for $10,000 seller credit back? That means the seller gives you $10,000 towards your closing costs. Well, $10,000 less in purchase price saves you a little bit of down payment, saves you about $65 a month in payment. Because it's about $65 for every 10 grand you finance over 30 years. Well, if you go and get the house at full list and ask for 10 grand back towards your closing costs, well, that's $10,000 you get. We apply it towards buying down the interest rate. It can make over a full 1% difference in interest rate that can save you $200 to $400 a month for the life of the loan.
Yeah, it really helps a lot of people. In fact, the one that we're closing coming up, Kiera, they got 15, right? We negotiated 15,000.
You crushed it. $15,000 seller credit for closing.
And what do they get? 5.875 on the interest rate? That's right. The rates are in the fives, guys. It's time. Time to get out there and start shopping.
Conventional 30-year fixed in the fives.
Yeah, we just got the appraisal, but you said the appraisal comes back at your team, came in at value, so we're good on that.
Yep.
Yeah, so it's kind of the perfect storm right now. And then I was talking with Mark earlier. He has another listing coming from a past client, and it's a little bit more of a fixer-upper. And I instantly thought about the one you were talking about the other day. What's that home? What's the name of that program?
That is the Choice Renovation Home Loan Program.
Choice Renovation. Try to remember that because I can never remember that.
And I'm glad you brought it up. I was just talking with another realtor locally who just went through an FHA 203K rehab loan.
Yeah.
And he literally just cringed in pain when he told me the story about how difficult it is to get the loan closed. And it really is difficult. We've got the conventional product that's super easy. We follow Fannie Mae guidelines so they can purchase with as little as 5% down. All they need is a 620 credit score.
Wow, right? 620.
No funky guidelines. They get to pick their own contractor. We approve the contractor in about 24 hours. They go out and they do the work. They put like a 15% reserve on top of the renovation costs.
Okay.
I'll give you an example. I had a family buy a house that was a HUD foreclosure. FHA loan on the home that got foreclosed upon. The house was in rough shape. It could not get mortgage financing. Well, this guy came in. We did the choice renovation. He bought for $307,500. This was up in the foothills.
Okay.
He put $80,000 worth of contractor bid upgrades into it. Our bank put a 15% reserve on it, so that was like $103,000 total.
Okay.
He buys for $307,500. That's his recorded sales price. That's his property tax base. But he put another $103,000 on it, so $307,500 plus $103,000, it looked like $410,500 on our loan application was his purchase price. He put 5% down on the $410,500. That was all he had to come in with down payment. Financed all of those upgrades. He basically turned the home into a brand new house, and we closed it in about 40 days. And all the construction begins right after close of escrow. It took about 6 months, and now he paid $307,500. He put $100,000 worth of upgrades into it, so we closed it at a $410,000 value because we had appraised for that.
All right.
Once he was done with the work, the realtor actually went out and did a comp search. It went up to about $520,000 in value.
Wow, that's just incredible. Like, why are we not doing more of those? It's kind of like a best kept secret, right?
Yeah, and you can use it for anything. You could be owning the home and say, hey, I want to put a pool in the backyard. As long as you have the equity, you can do the renovation.
So wait, so this works for existing people that are already homeowners too?
Correct.
So what are the stipulations for that in order to like?
It's just a refinance. As long as they don't go above 95% of the value of the home when they're putting in their renovation costs.
Yeah.
Or let's just say somebody wants to buy a house and there's room for an ADU. They can finance the cost of the ADU in the purchase loan.
You can do the ADUs now too?
Correct. Let's say they wanted a pool. They found the house they wanted, but it didn't have the pool. Well, they can buy with a choice renovation loan and finance the construction costs.
You're blowing my mind right now. I didn't realize that pools and ADUs would be included in this.
Yeah.
That's incredible.
Great product.
So I can go out and for people that really want a pool and say, don't worry about it. Just find one with a big enough backyard. We'll put a pool in before you come in and close on the deal. Well, you close, right? And then they do the work.
Yeah, correct.
So if you buy now, you can be in the house and have the pool ready by spring, summer when it gets warm again.
Yeah.
Ready to have the pool. That's incredible.
Yeah.
So what else has been going on in your neck of the world? Like what else is happening in the back end that we don't know about?
Well, we're finally seeing people being able to refinance, which is just a breath of fresh air. For the last 3.5, 4 years since COVID ended, right? Rates went from 3% to 7.5% in about 90 days.
Yeah, that was ugly.
And they've held there for so long that it's been, I think, the longest down cycle for our industry in the last 40 years. Usually you'll hit down and go back up. No, we stayed down.
Yeah.
So it's nice to not be the Grim Reaper. I get to talk to people and tell them, hey, we can help you. You can refinance. You can sell and go buy another house.
What's kind of the average savings that you're seeing? I know it's kind of varies, but people that had 7 and 8%, now they're down to what, in the high 5, 6s?
Yeah, it just depends on their credit score, what type of loan program we're going to use, and how we're going to structure it. But the big win is the average American consumer carries about $105,000 in consumer debt. Now, it sounds like a lot, but it's easy to acquire. If you've got 2 car loans at 30, 40 grand a piece, okay, that's 70 grand. You got a credit card for 10 or 20 grand, a couple of them that adds up, maybe a personal loan for $10,000. Before you know it, we have $100,000 in consumer liabilities on the credit report. Yeah, you might, and I just did this for a gentleman. He had a 2.625 VA home loan. Right?
Incredible rate, yeah.
But he had $80-something thousand in consumer debts he'd acquired. And, had to do with businesses, upgrading the home, all these things. So his credit cards, personal loan, car loans, he was drowning in the debt. We took him out of his 2.625 COVID interest rate, consolidated all his debts into one new mortgage at 6.125. His outgoing monthly after the refi was $880 a month less.
Wow. 800.
And all that interest on credit cards and car loans and personal loans that's not a tax deduction went into his mortgage.
Exactly. People don't talk about that. They're so hung up on the rate for the mortgage, but what about the 20% on your credit card, or what about 10% on your auto loan? I mean, it all comes into play. So wow, quite a success story. Yeah. And then eventually they can rate and term refi that if and when the rates ever get that low again, right? I mean,
right. Yep. Well, and some of the folks that we pre-approved, say a year ago, when the interest rates were 7.5%, sometimes 8%. Let's just be honest, they were.
Yeah,
right?
yeah.
Now I'm calling them up and saying, "Hey, did you ever buy or sell?" No. Well, hey, let's take a look at what the rates are now. They're a full point and a half lower. Your purchase power just really increased. It's just an exciting time to be able to call people and tell them they can make things happen again.
Yeah, totally. So what are you seeing as far as a difference in purchase power and the difference in a 1 or 2%?
Wow. Well, it's It's kind of a variable, but if you see a 1% drop in interest rate, it can move your purchase power by 40 grand, 50 grand.
Wow. And that could make a big deal over here too. 40, 50 grand. You'd be a completely different neighborhood, much larger property. Like I just moved and yeah, of course it was a more expensive home, but it made all the difference because I needed that extra space. And collectively, now that I've got mother-in-law living with me as well, I'm actually paying less than I was and I'm in a better neighborhood. So, everyone's situation is a little different. I think you're the one that said everybody is a snowflake as far as like how unique they are.
Yeah.
Got to watch out saying that nowadays, but he means in a good way.
Well,
Everyone's unique.
Yeah, honestly, I've been doing loans for 24 years, and I've had people ask me, "Wow, you're not burnt out or tired of it?" No, because every single transaction is so unique. Every family's got its own circumstances. It's a whole new relationship we get to develop. So yeah, I say no two snowflakes are alike. So. No two transactions are the same.
Absolutely, yeah. And turn times, I noticed that we might even close this one a little early. What has been your typical turn time lately?
Our average close in my pipeline and my branch is anywhere from 18 to 22 days on average. That's our average close. Even if it's a 30-day contract, we can close it that quick.
Yeah, and sometimes even quicker. I mean, I've seen you do it a little faster. That's the average, right?
Yep. But like the one we're going to close, I think, what was it, a 21-day contract?
Yeah, looks like it's going to be a little less than that.
We're probably going to close it a couple days early, even with losing the 4 days from Thanksgiving.
Yeah,
Right?
That's true.
Yeah.
Okay. So then if you're able to close quicker, that means that if we're in a competitive situation, there's more than one offer. If we can close a little quicker, sometimes it makes sense for the seller and they'll go with our offer if everything else is the same. So working with a lender that's very experienced, has access to these type of programs, and can close quick is cash deals sometimes. I mean, that makes a big difference in why you should use someone like Rob.
You're absolutely right, and I'll edify that statement. I'm in the process of helping a family with the largest purchase I've ever been a part of right now.
Oh, wow.
It started out as moving from Discovery Bay to Mountain View at about $2 million. Well, they called me up right before Thanksgiving, like literally Wednesday night before Thanksgiving, and said, "Rob, we found it. It's our dream home. It's $4.3 million." Right?
Sounds like my dream home too.
I was talking with their real estate agent all through the Thanksgiving holiday.
Oh, wow.
And it actually was a property that sat for 36 days with no bids. Then, as luck would have it, 2 buyers show up at the same time, our family and another, and it became a multiple counter situation.
Yeah.
Highest and best, who's going to win it? Both families went up. Well, the other buyer went up over $100,000 more than our buyer.
Wow.
But the buyer's agent called me and said, "Rob, it's a trust sale. There's 4 adult children that inherited mom and dad's home. They've passed on.
Okay.
Speed will win. How quickly can you close it?" So we got a 15-day contract. We're going to close it in 15 days. And we won the offer at 100 grand less because we're closing faster.
Wow. 100 grand. You just gave up 100 grand because you get it done in a week or so faster than anybody else.
The other family was a contingent buyer.
Yeah. So, and then what can we do if you have a contingent situation? Are you guys doing any bridge loans? Is that something that's still out there in the market today?
Certainly are, and honestly, while we have the bridge loan products in-house, I think HomeLight does a pretty good job.
Yeah.
Because they'll loan you the money up to 75% of the equity in your existing
Something
home,
like that, yeah.
with no payment attached to it, right? And they just cross-collateralize, so they're leaning against that house and the one that you're going to buy. And you have like 90 days to sell the other one and then pay them back.
Yeah, I know the Marks closed a couple of those somewhat recently, and they've been really successful too. So it's another good program, and not everybody has access to that. You have to be HomeLight certified, which we are. So if it sounds like something you'd be into getting some more information on, please let me know. But so one more question for you. So if you're hunting right now and you get into the contract and you close, let's say you close by the end of January, when's your first payment due on that new mortgage?
Anytime you close in a given month, so if you close in the month of January, you'll skip February, your first payment will be March 1.
Yeah, so check that out. So people that are thinking, oh, well, I need time to kind of recap that money for my down payment, it's right built in for you right there.
Yep, absolutely.
Well, all right. Well, thanks for being here today.
My pleasure.
Oh, yeah, we'll have to have him back on again. So if you have any questions on home loans, give Rob a call. Rob, you can be reached at what phone number?
Rob O'Malley, preferred rate, that's 925-418-3956.
All right, we'll see you guys next time.